Apologies, everyone here, while I try and sort this out. Okay, hopefully the... Okay, I think it's back. I'm not going to touch the microphone again. Every time I touch it or even look at it, it goes a bit funny, but I think we're there. Anyway, what I was saying was apologies for the sound. Thank you for bearing with me yesterday when I wasn't around. I think it's on. I think it is working now. Microphone says it's working for me. His daughter's birthday, we were out celebrating it, and so I appreciate you coming in on a Wednesday instead. Today, what we're going to talk about, we're going to actually just have a look. There's been some economic financial data that has come out the last couple of days. It's got everyone very excited, and perhaps we are still saying it's gone again. Are you sure about that, Reese? Can anyone else tell me? My microphone is registering. Okay, so I've put it on this. Oh, you can't see. What I'll do, just so you can see, I put this on here. You can kind of see in the center, my green mic is all going. So I assume it is working. Some people have come in and said in the chat it's still working. So Reese, maybe just have a look yourself there. Anyway, going back to where we were. So, yeah, some economic data has kind of come out. We're going to discuss. Everyone's getting a little bit excited that we actually might be ready for that next move up, and I'm not necessarily disagreeing with that. I would like to remind you all what we talked about last week with September being a bit of a pullback. We're also going to have a look at the data there and just try and see whether or not that's happened yet, or if it's even going to happen this month. But we will rattle through that. We will have a little bit of chat about some news, mainly about this economic data that's kind of coming through. A couple of RT questions, so thank you very much for those. Then we'll get in some good old fashioned charting. Right, let's just jump straight through. If I'm looking like I'm hesitating, my phone's blowing up. Nothing directly at me, but it just keeps on pinging. It's quite annoying. Anyway, here's the Bitcoin data as we see it. 3-day time frame. We did have this compression. I thought maybe we might get to the bottom of the apex there. It has started to just... I wouldn't say it burst out of it, but it did at least break out of that. We started to look at it to go to the upside. I'm just going to get rid of this now. I think it's kind of null and void. We've seen it there. I'll keep this yellow line just going through just in case we see that as a resistance line a little bit later on. But to be perfectly frank with you, extrapolate that out, we are probably talking about a new all-time high. What I am saying is that 110,000, the white line at 109,600 has proven to just be such a good level. Previous cycle tops, we talked about, not cycle tops, previous ranging tops come down, and I accept it did slightly break through the bottom of that one, but you can kind of see there's a number of 3-day candles there, closing and opening in and around that level, kind of tying in that this is quite a strong level to look at. So I would not be surprised if we continue to see a bounce from this one. It has been a strong sort of 4 or 5 days since we retested that level, and hopefully that will continue. Bitcoin's market dominance kind of just ranging out sideways at the moment, which I think is for me a positive thing if you are looking for further falling to the downside to work on your altcoin portfolios. We're just kind of like taking a bit of a breather from a fairly decent move back down before hopefully making that move again. I would just like to point the attention to, let's just go for this white line for now, and just sort of say the only thing that we need to probably have a look at is we sort of are running into historic sort of support and resistance in and around there. So as I say, I'm not saying that is enough to stop it from dropping back down, but moreover, actually just probably why we're stuttering in and around that, just letting Bitcoin catch up. I will talk a little bit later on about my views on where this is, but that's just the picture that we see at the moment. And with total market cap 2, again, we're just running into this sort of peak line, not an all-time high. We know that was set in the last cycle, but the sort of this cycle high of about 1.6 trillion. So yeah, we are working in and around those levels. We do need to see that move back up there. But actually, for the last 2 weeks, we kind of struggled in and around here. Which, don't forget, this is the peak that was identified after the Trump rally in December 24. I'm going to try to stop looking at my phone. There's so many messages going off at the moment. And then we've got BitTensor. And, you know, I still stand by the fact that BitTensor's price action has not been great. For those of you who did come to the cuddle, it was great chatting to you all. And I'm not necessarily there to scare you with BitTensor's price action. But the reality of it is, you know, we can only look at this chart one way for me. And that is that we're continuing that progression down. Now, what I would say is, you know, this sort of yellow trend line that we've marked from some previous bottoms has worked out to be a relatively good indicator of a potential bottom at the moment. And I think there's some optimism for a move up with potential convergence, I suppose, on the white and the yellow in and around that sort of 410 region. I sort of shared my views on the other charts about sort of get out levels if we can't break out of that, just to sort of do a complete side step rather than my sort of up to 50% ones. But for me, they are kind of in and around that region of about 385. We'll see what we do at this level here, and then also at this level here, just over 400. But for now, you know, a good move off the bottom. And yeah, we should just hope that that continues. I have my full allocation of tau back in the market. So, hell, I want to see that rally up now. Of course I do. Let me just move on to the next bit. We'll get back into charting everything else a little bit later on. So just one thing that I saw pop up today, a couple of us have had a chat about it in Discord, and that is that BlackRock have sort of set out their intention to launch. This article is calling it ETF, but as our discussions in Discord have kind of suggested, it's probably not an ETF just because of the way the UK has aligned their sort of investment rules to sort of mirror what there is in the EU. It's probably going to be an ETN. Don't necessarily worry about what the difference of those is. Just ultimately at the moment, BlackRock is looking for October should rule changes to retail investments for cryptocurrency change, which is apparently imminent. They're going to look to try and set up that ETF, ETN, whichever one it's going to be, which I think, you know, regardless of whichever one it is, I think from just a bigger picture, I obviously embrace this. I think it's obviously opening it up to more retail investments, but I look at it from the other point of view that maybe we as in those of us that live in the United Kingdom, we're starting to sort of crawl ourselves out of the stone age that is the last sort of 2 or 3 years in terms of all the clampdowns that we've been having with cryptocurrency. I'm not saying this is going to be the end of everything and just a sudden opening up and the floodgates there, but you know, we're slowly starting to make those steps back, and yeah, we'll just have to wait and see how that one transpires, but a positive step nonetheless. Looking at, I do have some other news, but we'll cut to those later. Just looking at sort of Bitcoin's price over the sort of last week or so since we've been on. So we had this move back down last week, which we talked about. The last Avenger call was when we just dipped below this 109 level. And this, as we talked about at the time, was the point, was the two, not the point, the 2 level on the fib that I've drawn for ages, which talked about as being a pretty strong level. It's suddenly coming back into play. What is interesting with this one is it's 109,600, which, as we know, is the level I'm talking about here, 109 on the top, 109,600. So we can kind of see some confluence of data there suggesting why this is actually such a strong level for us to either hold as support or previously have as resistance. But we did make that move back up there, and look at today's move. I mean, it is almost like clockwork. We'll have a look at vector candles, but this is a liquidation heat map. And what did our wick take us out to? Right to the very top of this liquidation zone. And then we've started to retrace ever so slightly. I'm not saying that this is where we're just going to collapse from here, but the fact of the matter is the move this afternoon went right up to there, and then right when we cleared out that zone, just we ran out of steam and we just started to consolidate there. But that's why we have them on there, big picture, just for us to have a look at. And if you're not convinced by that, just have a look at this one here. So I've rewound the clock to before the markets open today, and we've got a bit of financial data out here. And I just want you to just have a look. So we had this vector candle here, which was only recently formed, but probably going to be taken out regardless. But I'm more interested in this vector candle here and the vector zone that left, which was at sort of 113,600 to 114,300. I'll just mark that off with a rectangle. because, I mean, you know what's going to happen when I get rid of this, and we see what really happened today. Bang. We've closed it exactly, well, not exactly, but almost to the very top of that vector candle. There it is. If you zoom in really close, a slither left, but for intensive purposes, just targeted that area of trapped liquidity, took it out, and then we started to see a bit of a retrace. And then we get back into that conversation about, look, no vector candle ever really survives on the lower time frames when we're ranging, and we've left a vector candle behind us right now. I would not be surprised for us over the next day or two pulling back into this vector candle, maybe even down as low as 50 EMA. We'll talk about that one a little bit later on. The next few zones that we've got, I mean, we've got this one down at 105. We've got to lose. I mean, it's almost a Gandalf line now for Bitcoin at that sort of 109,600 level. So unless we really start to break that with some conviction, I'm not necessarily too worried about that one. What I would say is the one at 118,500, there's still a bit of work to do to get up to there. So don't think that just because we cleared out the 114,000, it's a straight path shot all the way up to there. But, we've got to take them out on the steps that we go. And we have been moving up. I mean, again, I'm not drawing this in the sort of the cleanest possible fashion, but we have just been snaking up from this. And until today's candle, this 12-hour candle, I wasn't really too happy with what I was seeing. And let me just do it on a clean chart, I think. I think it's going to be easier. Let's just get rid of this. And the reason behind that was, once I zoom in and clear this up, replay, all these things we have to do. Okay, so I've taken off today's 12-hour candle. We were just moving up this here. And okay, we were wicking. I'll tell you what, we'll do it for the wick, shall we? So down here, and kind of moving up, a bit like that. But I was worried that we were running into, effectively, some sort of compression, whether you wanted it as a flat top one or whatever. I was kind of looking at it flat tops, but that was my concern. We're moving up this, but it's a classic kind of, we're getting squeezed, likelihood that we're actually going to see that move down. But thankfully, with a little bit of help from data yesterday and today, that wasn't the case. And we've actually popped up through the top of it. And depending on how this candle closes, we can at least say that we have cleared that one there. And we're even where the body is right now, sort of right at the top of these wicks. So if we can get sort of above 113,500, I think we're completely invalidating what I was looking at. And it's given us a little bit of hope in the short term that this may continue to be a bit of a move up. The reason I said that 18,000 or 118,000 level might be a bit difficult is, again, even if it's on a clean chart, I'm just sort of looking at these tops here, and okay, maybe it should have been a rectangle, but we've got plenty of price action. And this range here, the base of that was around about 117,000. We've got to get through that. That was hell of support turned into resistance. Support, break through it, then we Kobo off it. That's a decent amount of resistance at 117,000. So we've got some more economic data coming out tomorrow, which may help us move up. But I think the real battle for the bulls out there is going to be that 117,000, certainly in my eyes anyway. What was I trying to do with this chart? I'm not sure before we went off on a tangent. Let's just get rid of all of that. And then I think what I was probably just trying to suggest was, still though, big picture, has the bull market ended? Absolutely not. We've got plenty of evidence to suggest that we're still going in the right direction. And okay, we've had that pullback. Not to the 50 EMA, we've not lost the 50 EMA, we've got plenty of time to go with. And actually, what did we pull back to? We pulled back to the 20 EMA on the weekly time frame, a perfectly normal level to pull back to, not guaranteeing its safety, but of all the places to bounce from it, then that's the area to bounce. What is interesting, just going off sort of what we discussed last week, is, let's get rid of these, that and that. So we're talking about September, seeing some sort of low that ultimately forms. And well, actually, we have had a low form already in September. And it's here. It was on the 1st of September, is technically lower than any of the August dates. So you could argue, September, we normally see that sort of pullback before we have that move up. We could argue that the bottom is already in. And that's something that we just got to bear in mind. It might only be in by $20. It doesn't necessarily matter. This is actually saying that 1st of September, basically what we said last time, we could have a bottom in. So, people, myself included last week, talking about how, first couple of weeks in September, we see that pullback. and that correction from an August high. Well, look, August, we had the high, the all-time high, pretty much 124,000. So that was the August high. Then we've fallen into September, and September has already formed a low, lower than any day, price that we saw in August. That's not the first time that that's actually happened. We saw this actually back in 2016, and this is just using the charts that I used last week. And this candle right here where the arrow ends, that was on the 1st of September, and it formed a low for the month. Didn't quite follow the same rules in terms of, outperforming or underperforming the August low, but that was the low set on the first day of the month. So, this has happened in the past. And for those of us that are worrying if we're going to get that correction because we're expecting one to happen, just bear in mind that, we might not now. We have seen that low. And if that helps to sort of like help your decision making in terms of what you may do over the next 20 days, then hopefully go with that. We'll touch back on some of this stuff a little bit later on. And I think that's that there. Let me just have a quick drink if I can. Sorry, I should have said thanks for anyone that's put in the chat. All sounds sorted, Chris, but possible inverted head and shoulders on the Bitcoin daily. Yeah, I think that's on the daily here. So you've got two places that you can build this this shoulder from. You can either, once I get a brush, have it there and there. I don't like that one because of this, I'll be honest. Or you could have it here, head, and then sort of some sort of shoulder, I suppose neckline, in and around there. It'd probably look a lot cleaner on the 4 hour and the 12 hour, but I can see some form of head and shoulders with a potential breakthrough at the moment. Where could that end up taking us? Round about the 118 level. So there's definitely some food for thought on that one. We'll have a look at it a little bit later on. But let's just talk about some of this economic data that's come out of the last sort of 24 hours or so, because there has been a couple. We had PPI today. We also had an update on the US jobs data, which sounds horrific to start off with, but potentially giving us some short-term benefits. So for those of you that aren't aware, the US Labor Department revised payrolls down by 911,000 jobs, which is the largest cut in US history, showing that actually the labor market is nowhere near as strong as what we've been led to believe. Now, where has this magical jobs data come from? Well, it's alleged, because I've not bothered looking into it. I don't know why I'm saying alleged like we're going to court, but it's potentially associated with the jobs that came in sort of, I think it's like the year of 2024. So effectively the last year of the previous president's time in office, which, going on the fact that also last month we saw 255,000 jobs have to be corrected as well. We're talking over 1 million jobs that potentially never actually been there, miscounted, however, given us through 2024 and also 2025 sort of false understanding of how strong the labor market was. And when you think on sort of like for the last, 6, 7, 8, 9 FOMC meetings, we've always had Powell tell us he's data driven, he's waiting for the data. So either he was totally confused by the data because a lot of his other data arms suggesting that we shouldn't have such a strong labor market, yet the jobs data was saying that actually there was strength there. Or, and I'm not saying there was an inside job on this, he just knew that data was probably not correct and needed to be corrected at some stage. Now we're finally getting there. But what that did, I don't know what this one here is. Oh, this was just a tweak from Watch Guru that kind of says where it was. I can't remember my train of thought of why I lined them up in the order that I like this. But anyway, so that's the jobs data, came out yesterday, saying that actually the labor market isn't as strong as what we want. That's a positive thing if you want rate cuts, because we're starting to see that the high interest rates are having an impact on the labor market, and we're starting to see that sort of come off. So now we can start thinking about bringing that down without overextending, over-risking ourselves, causing inflation to go up again. You go on top of that with the core PPI actually being under what was forecast at the moment. So it was previously at 0.7. That was actually 0.9. It was revised down to 0.7. Thought it'd be down to 0.3. We've actually got a negative reading. Again, kind of suggesting that maybe we've got inflation under control and the cost of goods and services are coming down still, which again is going to help feed towards that narrative for Mr. Powell next week, the FOMC meeting, to say we're going to have those rate cuts. And we kind of have a look. Sorry, here, this one. So we have a look at the FOMC rate watch for next week. And, you know, we're now not looking at all at a sort of remaining in the current bracket. The current target is 425 to 450. Well, 90% chance that we're going to see a 400 to a 425. So that's a 25 basis points cuts. But we're actually even talking about a 50 basis points cuts with in and around 10% there at the moment. But you go back sort of a week ago and there was nobody talking about a 50 basis point cut. Now there's such strength and conviction that this is going to happen. The conversation has actually moved towards how many cuts can we have by the end of this year. Now you speak to Donald Trump, and sadly I don't speak to him regularly, but you know, he's wanting, you know, drastic, you know, 1% cuts through the year, trying to really bring this rate back down. Whether or not we get that, we'll have to wait and see. But what I do find interesting is CPI. Sorry, here it is. CPI due out tomorrow, 2.9. It's actually expected to go up ever so slightly from 2.7. Well, wait, I'm not necessarily interested. We'll find out what that is tomorrow. So for those who've seen, there is some unemployment claims, but the jobs data has been an absolute shower. Who knows what that's going to come out with? But what's interesting is we haven't actually had a rate cut this year. The last rate cut was the 18th of December 2024, and you know, for 3 or 4 meetings we had several rate cuts of 50% and then a couple of 25s. Take us where we are. We've gone the entire of 2025 without a single rate cut, which you go back to the beginning of the year, nobody expected that. Everyone thought that Powell would be cutting rates much faster. But what I find interesting is he's been working towards this 2% mandate for rate cuts. You know, we need to get inflation down to 2%. Well, we're at 2.7 at the moment. Matter of fact, in March, April, and May, we were at 2.4, far less than where we are right now. And he still wasn't interested in cutting the rates, which actually kind of suggests, well, what has changed its tune? And obviously with the job data coming out and the massive corrections, the swathe of corrections across the board there, is it more that he is favouring labour data rather than inflation data, which may lead to the rate cut? Now, we're going to have to wait a week to find out whether or not this rate cut happens, but it almost feels like a foregone conclusion there. And with only October and December to go, if we go to October, they believe, you know, by the end of the October rate cut, there's a 73% chance that we'll be down at 375 to 400. That's assuming, I suppose, that we had a 25% rate cut this month and then a 25% rate cut next month. But by December, so that's 2 rate cuts in a row they're looking at there. And then December, again, we're forecasting quite a way off. But the money at the moment is on a further rate cut to 350. So 3 more opportunities for rate cuts, and estimating anywhere from 75 basis points to maybe 100 basis points over that period, which, you know, is a positive sign. It's something that people are getting excited about. And I think for short term, I think that is, you know, something that we will gravitate towards, about finally seeing the sort of reduction in interest rates as sort of like our next stepping stone to, you know, printing money, and off we go. But I think a lot of retail traders like ourselves, we're missing out a key step, and I've talked about this plenty of times before. And so what you can see here on this chart, we've got the S&P 500 in the blue line. We've then got US Federal Reserve assets, which are basically just, you know, sort of whether or not they're printing money. This thing's going up, they're printing money. This thing's going down. It's they're sort of burning money, if you will, quantitative tightening. And then we've got in the white, which is the interest rates. And you've heard me talk about this before. You know, we go to this left-hand side. Interest rates falling is not on its own enough to generate the reversal in the markets. And we can see back in 2007, interest rates came down pretty hard. But look, the S&P fell just as much. And then money printed towards the end, when things were getting a bit under control, started to turn on. But as I've said so many times, that wasn't enough to actually turn the markets around. What we needed was confirmation that interest rates have stopped falling and that the money printers are turned on. We go to 2020, COVID crash, similar kind of thing. So we were in a period of quantitative tightening leading up to sort of August 19. We then turned the money printers on whilst we were having rate drops. Then obviously the world shut down at the beginning of 2020. We massively turned off interest rates. We dropped them so we could. And it was only then, money printing's already on, but it was only when we got to that zero level we weren't or couldn't do any more that suddenly we started to see the markets pick up. Now, okay, in that instance, we had unprecedented printing across the world, but you get the point. And we look to where we are at the moment. We are still in a period of quantitative tightening. Look, we're still going down at the moment. Yes, it is bottoming out. But rate drops have not by any means finished. We've had a pause for 9 months, in fact. We need to see that sharp drop off. But what we know with these sharp drop offs is it leads to drops in the market. And so the concern is that although we are looking at the recent data, jobs data, and the increased likelihood that we're going to see an interest rates drop, and we're thinking, great, we're almost at the back end of this, it's almost time to print money. Our short-term memory as retailers has forgotten that there is a crash that will happen between now and the money printers turning on. And when we have a look at some of the RT questions that are being asked, we can expand on why that may be the case. But we have to have that next step. And for those of you that don't like looking at it this way, I found someone on Twitter with a very similar kind of chart here. You can see the federal rates, so in blue, you might not be able to see this, where you can, just coming down. You can see the steepness in which it comes down leads to a recession. Steep drop off leads to a recession. Steep drop off leads to a recession. Well, we're expecting a steep drop off at some stage. We need to get interest rates. Let's be optimistic and say money printer turns on at 1.5, which would still be incredibly high compared to most other times we turn the money printer on. That's still a hell of a fall. It's still 2.5% that we need to lose. So it's likely, however long it's going to be, we are going to see a recession. And I know some of you in the group follow Camel Finance. He's been talking about it for some time, that we're actually already in a recession. And just the reallocation of this job data is just going to slowly confirm that actually we've been in a recession for a while. And maybe we retrospectively look at it and say, yeah, the recession started 2 months ago or whatever. But, and I'm talking about the United States here, we need to have that recession before we get anything really going from it. So just bear that in mind in terms of where we sit. And now that kind of helps me, well, we can click on this whilst we're talking about it. This helps me lead towards where we are with the psychology in the market at the moment, because whether it's a crypto market or it is just the traditional markets, there's very much at the moment, we can't lose, everything's going up, earnings are all looking great, Bitcoin ETFs, blah, blah, blah. People are talking about extended cycles and everything else. And just to take it back to crypto and the 4-year cycle, every 4 years when we get to this stage, the sort of the thrill, the belief into the thrill, not quite euphoria yet, people are always talking about this time is different. Okay, this time we're not going to see that crash. We're not going to see that correction. I see YouTube influencers, the ones that I really dislike, talking about the fact that we're not going to see sub 100 again. Talking about the fact that BlackRock aren't going to let their customers fail. All of that kind of nonsense, really. But actually, we know that, and I don't know when it's going to be, but we know that there is definitely a sort of financial economic perfect storm that is happening at the moment. And that is likely to lead to a recession, of which we are going to see a correction in the market. Whether or not that happens in the next 3 months to perfectly time with the 4-year cycle, we'll have to wait and see. But it's certainly just giving me food for thought, pause to say, I'm not believing that the 4-year cycle is dead until we've hit the 1st of January 2026, and there's some compelling evidence that we are still going up. So I think it's worth bearing that in mind as we look at this sort of psychology of a market cycle. Our bags may not be where we want them to be, but there's definitely belief back in the system. People do get rattled pretty quickly. I mean, we saw it drop down to 38 on the fear and greed just because we corrected back to 109,000. But we're starting to get to the point in which we start to believe our own hype. We believe that we were the ones that caused our bags to get to where we are, not the fact that it was a bull market. But this has been a very long, drawn out bull market. So that's just kind of like, I suppose, my thoughts on the economic data that has dropped and how that probably ties in with yes, an opportunity for money printers to be turned on, but not until those interest rates come right back down. And that's going to lead us to some uncertainty in the markets, which will probably lead to an economic crash, and however long that recession crash lasts for, before we then see the build back up. Right, I'll cover a couple of RT questions, and then we will go into some more detailed crypto altcoin charting. I missed the first two last week. You guys must have posted these right as I went live, because I didn't see them. So Richard's first one said, is the Nova app direct debit card a viable off-ramp spending solution? I logged onto the Nova app today to have a look for your question. I've not used it. It does seem that you can link your debit cards to that one. It uses a company called Merkio, which I've never used before. I went into their website to try and find out a bit more information. Their website seems to be more tailored towards, platforms, using them to be able to withdraw funds. So I don't know how it works back to your bank or anything like that. It certainly seems to suggest that that is a route. I don't know what the costs of it are going to be, and I don't know what the rates are going to be. But if it is, it's definitely, even if it's not your primary route as an off-ramp, might just be something to try and set up in case we need to get out quick, or your individual bank doesn't like the way you're trying to do it. So I don't have any other information on that. I'm sorry. John's then put, and this is a question I think ties back to what we've just been talking about now. What could be the medium to long-term effect for the crypto market, given the ever-increasing bond yields for the 10-year and the primary 30-year? So this is where we find the 10-year at the moment. I'll be honest. I mean, I got the 30-year chart in. I don't think I've ever looked at the 30-year. It's looking fairly similar to the 10-year, and then we've got the 2-year as well. So just checking that my microphone is still working. I think it is. Let me just get that screen on there. Okay. Anyway, so I mean, you're right. Over the last 5 years or so, I'm on the 10-year, the 10-year bond, we have seen it massively climb out of the 2020 lows, and then we've sort of seen over the last 2.5 years, it's kind of ranged in and around that 3 to 4.5 area. But I just take you back to what we talked about. What happened at the beginning of 2020? We had a huge economic crash. Okay, we had that resetting of the market, which then led us to a very swift recovery out of it, given that the money printers have turned on. And I just sort of remind you that a fall in the bonds, and correct me if I'm wrong here, but a fall in the bonds, represents that flight to safety for investors. They're no longer interested in sort of the wider markets, and so they look to probably buy sort of treasury bonds, etc., which means that the government can lower the rates because there's more people that are interested in getting them. And it just generally signal, economic troubles, whether that be deflation, whether that be a recession, or major rate cuts. Well, we're hoping for major rate cuts. We kind of worry that will lead to a recession. So we're kind of looking at that at the moment. And what I would say, looking at this this sort of chart here, it's on the monthly, so I appreciate, it may not be the cleanest to see, but, it feels to me like we're coming in and retesting this support level at the moment. And it should, or if we break that level, that's kind of suggesting that actually we're going to have that, flight to safety, that sort of, markets are not going the way we want us to, we're moving down. And whether you want to tie that into gold at all-time highs as another avenue for a flight to safety, etc., I don't know. But for me, we've got, perfectly good pinching at the moment here. And sort of a symmetrical pattern. Can't really guarantee which way it's going to go, but given kind of some of the other data that we're looking towards, it probably looks like this is going to fall. And ultimately, that's what we want to see. It may mean that once we break it and we start to fall away, a bit like what happened in 2018, 2019, we start to see stock market's price initially climb up as we sort of get to that euphoric kind of phase of like investors trying to get what they can out of things. Maybe market makers bidding up the price of the stock market so they can actually dump on those poor retailers, but we'll leave market maker theory for another time. But we know that, we've seen historically when that comes back down, that the crash is likely to happen. So this originally, would be looking at sort of a medium-term prediction, but given how close we are to potentially this falling through, it probably is a short-term sort of crash. If we then start to see this sort of fall away, if we then start to see this move down, where's my pen? Down here for that correction we talk about, when we see the money printer come on, and everyone starts to sell the treasury bonds, move it into some other assets, so the rates have to sort of go back up. It will just, for me, just depend. And I don't know how long, John, your medium and long-term horizons necessarily are. But, we have had in the past these rates back in the 80s, all the way up at sort of 15%. We're kind of in that midway point at the moment. We had that huge correction 2020, but we start to sort of work our way back up. Maybe we see that sort of pullback down here and we start to work our ways back up. But, if we can continue on an upward trajectory, the argument would be that that is a positive thing for the markets traditionally, and hopefully crypto as it goes through it. As I say, not really looked at the 30-year, but it's kind of similar picture. I suppose on the monthly here, you could argue that that's a bit of a steeper angle, but it's still sort of playing ball in terms of like really running into this trend line. And losing this trend line is not enough. We kind of have to break 4.1 on the 30-year and start to actually make some of these. But on the 2-year, which is moving obviously a little bit faster, we can kind of see actually that, we've potentially broken a couple of these levels already. This one here initially, and then we came back, we koboed off it, I suppose. But even now, we're potentially falling through the bottom of this one. So maybe we are starting to see the signs of that. I don't know. That was just my ramblings on it. Okay. Next one, Richard today, different Richard, I think. Not going to be here for it, but he wanted me to go over that security concern that was posted in Telegram. Don't really understand the copy paste thing. Does this mean from Notepad into sending address fields? What actual common platforms that the community is likely to use are compromised, many exchanges, Nova Wallet, staking, etc. Read the X thread, but there doesn't seem to be any definitive do not use and okay to use. Appreciate this may not be a cybersecurity professional. Any points? Okay, so let's just do this and this. So on Simon posted out, it was this note here from yesterday about clipboard hacking. If you go through onto the thread though, oh, it's not that way. This is it. So I don't know who Charles Guillemet is, but there's a large-scale supply chain attack in progress. The affected packages have already been downloaded over 1 billion times, meaning the entire JavaScript ecosystem may be at risk. The malicious payload works by silently swapping crypto addresses on the fly to steal funds. We'll come and touch on this in a moment. If you use a hardware wallet, it's not a problem because you've got an extra element that will prevent that. It's unclear at the time he posted this, which was 2 days ago, whether the attacker is also stealing seeds from the software wallets directly at this stage. So when you click on this link here, and it goes into this issue and this concern in more detail than I perhaps understand. But to sort of go to the comment that you raised, Richard, in terms of what the concern is, we scroll down here, and it's attack vector 1, passive address swapping. And we're all victims of this. We've done crypto transfers so often in our lifetime in crypto that we get to the point now where we kind of remember the beginning of our wallet and we remember the end. So we just hit Control and C, copy it, paste it into the new address, check the last 4 digits or whatever to make sure they're right, and then just hit send, and we're done. Well, what this is suggesting here is that the hack or the malware that lies in there is, it's not just that they are, have access to be able to sort of like put in a different address. But what they're actually doing is they're not just picking a random wallet address anymore. What they're doing is they're able to see what the correct wallet address is, and then they are looking to try and get as quickly as possible a wallet address that really closely matches it. And given the amount of varieties you can have, it means the amount of varieties are ones that are really close. So they may be able to find 100 wallets that have the last 4 the same as what yours is. So if you're just going off the last 4, you think it's right, and actually they change the middle E to a B or something like that, and it's totally taking you out. And so, I don't know if this is still a thing and for how long it's going to last for, but, just the prudent thing to do, unfortunately, is to painstakingly go through every single letter and make sure that you're happy with it. Not only that, is to do the test sends anyway. To try and ask your question, I don't think it's limited to particular exchanges, could be absolutely anywhere, but the script contains extensive lists of attacker-owned wallet addresses for Bitcoin, Ethereum, so a lot of stuff on Ethereum, the ERC20, Solana, Tron, Litecoin, and Bitcoin Cash. So the vast majority of what we're looking at, and that doesn't mean that they are the only ones there. I'm not really too worried about this myself because I haven't done any transfers for starters. I haven't done any in a while, and I am pretty prudent. I still now send a test one every time because I've just got into that habit, sending $10 or whatever. And I do try and check my address as best I can. I'm not 100% foolproof, and who knows, now I've said it, next week I'll be popping on to say that I got hacked. God, I hope not. I've just gone and lost that page, just bear with me. Okay. Bobby's put Charlie Kirk has just been shot at a Utah rally. That is what is blowing up on my phone at the moment. I obviously am live. I literally went live as that happened. I don't know if he's been shot and killed or what the circumstances of it are, but I now have 104 messages about it because I can see the title of them going up. So the people in that group I'm in are talking about it quite a lot. I will check it out afterwards, but I do hope he's okay. Next question. Steve has put, what are your thoughts on the Bitcoin bull market support band? We just retested it. So I had heard of the Bitcoin bull market support band because I've seen a couple of videos by Ben Cohen and he has it, but I don't pay for his subscription, so I don't have it. However, I did find an indicator on TradingView which says it's bull market support band. It is the 20 SMA and the 21 EMA, which I think is the right way. For what he uses, 21 simple moving average and the 20 simple moving average is the red one, and the 21 week moving average, which is the green one. So it's been a long time since I've seen him talk about it, so I'm not sure what he says about this. But what do I think just looking at this chart here? Look, I think we are still in a bull market. I think and even if we've peaked, even if 124,500 was the top, we are still in the bull market. We don't know that that's the top yet. We haven't had that big fall away or that retest. What do I think of the support band itself? I think it tells an interesting picture of, generally, if we're below it, we're in a bear market. It's on the weekly time frame as well, by the way. And if we're above it, we are in a bull market. What don't I like about it? Well, it works very well when price is either going up or down. And you can get, there's clear periods where we are significantly above it. Okay. And there are periods when we come back, like we have at the moment, retested it, and we potentially started to bounce from it. Similarly, in a bear market, there are periods where we are below it. And again, we have these retests up to it, and we go back down, retests up to it, go back down. And so you think, okay, in the grand scheme of things, this looks great. It's a really good indicator to tell us, zoomed out, whether or not we're in a bull or a bear market. However, the problem comes, in my opinion, when we range. Because if we just take the last couple of ranging periods that we've had, we've lost this bull market support band several times and for several weeks, if not months. And yet we're still in a bull market. We still have been in the bull market. And so I suppose, without knowing really what the bull market support band is supposed to suggest, I don't know how reliable the information that we are being told, that is shown on this, is for us to conclude whether or not we're still in a bull market, whether or not we still have bull market support. Because, okay, I can change it, but these are still the same. These indicators, these lines, they don't change to monthly now. They're set as weekly ones. So it doesn't matter what indicator I'm on. They stay there at the levels that they're supposed to be at. And so I don't know, if it's really telling me anything concrete that I can act off just because I see it. If we can drop suddenly through the bull market support band and then stay under it for 7 weeks, if this was my only indicator, I'd be thinking I should be getting out. But then, a few weeks later, we're back up making all-time highs. So I think it's a nice thing to have, and I think it's telling us a pleasant picture at the moment, but it's not something that I have on my charts or necessarily too interested about. I'm trying to just, whilst we're looking at it at the moment, trying to see if there's anything else I can sort of glean from it. I mean, it's positive that we have made a correction back to the 21 and the 20 EMA, and that we have bounced from that. But that's, I have that here, and I have the 50. That to me is a better picture. 50 EMA on weekly time frame. We break that, and we know we're probably in a bit of trouble. 20 EMA here kind of tells the same story as what the support band did. It generally tells a good picture as we go up, but in periods of ranging it struggles. And it's nice that we've come back and retested it. And if we get a strong bounce from this one, then perfect. We're heading in the right direction. But that's about as far as I would unfortunately take it. I'm not trying to. I don't know if Ben Cohen created it or if that's something that he uses every single day in his analysis, but for me it just doesn't give me anything new than what I already see. So it's not something I have on my charts or particularly follow. So that's where I am with it. Okay, let's get into some actual charting now. We've got 45 minutes in. So Bitcoin on the daily time frame, and I talked about why I was a bit concerned and a bit disappointed beforehand. There's another element to it which we can kind of see now. Prior to today's candle, we were also running up against the 50 EMA on the daily time frame and rejecting from it. Today we have finally cleared it. We only got as top as the cloud, but we have finally cleared it, which is, well, 4 hours to go. Maybe we don't finish clearing it, but that gives me some confidence that maybe we can have that move up. Still wanted to see us take out that 117,000 level, which is, top of this blue vector candle, which I know has closed, but the wick is still technically there. Then we can start looking 120 and above. If we look on the 4 hour time frame though, we'll get a bit closer into this. Excuse me, I just burped in there. We can actually see that we're clearing above. So we had this downtrend through August after the high, and we were talking about how the 50 EMA, the 20 and the 10 were just playing us like a fiddle as we sort of collapsed all the way back down. We found support on the 800 EMA, and we've started to make that move back up. And I know the 4 hours can interchange quite well, but we are making higher highs and higher lows at the moment on the 4 hour, using the 10, the 20 and the 50 as support. The fact that we've now managed to be able to clear the 200, I think is positive. What I would probably like and or expect to see, I suppose, is we probably end up closing this vector candle down here. But as long as we wick down into there and still close above, let's just say 112,700, keeping us above that 200 EMA, I'd call that a bit of a success, really. Get rid of the vector candle as we expect it to do, but still be able to build off on this one, make that move up to 117,000 that we talked about before. Let's move on to BitTensor, and just waiting for it to fully load. It has now. I'm still not happy with what I've seen. What I will say, and I am happy with, is the Gandalf line. Okay, I could have sidestepped, should have sidestepped maybe at 360 when we lost it here. I made a decision not to, and we've continued to be able to hold this Gandalf line, which has given me some positivity. Had we broken that significantly, I would have sidestepped. And yes, we can argue that we've done something very similar. We've found a support line, which, when we go on the daily time frame, is the Gandalf support line, which is also the 800 EMA. So a decent level of support, we've been able to bounce to it. However, on the daily time frame, we've not been able to break the 50 EMA. Doesn't mean that it's not going to happen. We haven't managed to do it yet, as we're working our way up into that one there. We're still continuing right now, 50 EMA dominated, to continue to make lower highs. I'm not necessarily going to say we're making lower lows, although this is a lower low to this one, but not to this one. So, at the moment we might have cleared that. We just kind of need to see how this reacts. The only way that we can negate, this would be actually for us to get all the way up here at 452, make this a high from this one, and then we can say, oh, we're making the trend. Sorry, I thought I was drawing. I'm not. And we can make that trend there, that we're actually in a higher high, higher low situation. But that's a long way to go, and I'm not suggesting that that's where we're going to get to. But if you're just looking at trend patterns, that's what we need to achieve. For me, let's just call it 367 on the 200 EMA. That's the battleground. This high here this sort of rejection point at the 50 EMA, which formed a high. That's what we've got to get to. To get there, though, we've got to get past the 50 EMA. Been difficult over the last couple of weeks, but something we've got in our favor is this vector box here, which we know we like to retake. So we may see that sort of momentum there. But if we struggle at sort of 370, 368, whatever this level is, then I think, you've got to ask yourself a question. Are we then just heading all the way back down to Gandalf? And I will be questioning whether or not there's a sidestep to be had there. This is the next level, and they are close to each other. This is where you run the risk of like, do I just wait? Because it's 370 or it's 392. And that's going to be difficult. And I think for me, we'd have to have a strong rejection down here, and I might have to really just sort of like get out of 340 and get back in at 315 if we hold it, which isn't the biggest risk to reward. But if I get out immediately at 368, we could then just sort of dither here before moving up, and it's just too much of a risk because the pull of 390 is still there with another vector and another high. We don't get that one, then it's a big question about the actual strength and sort of longevity of it. Now, it was a very BitTensor ecosystem heavy cuddle talk, and actually even I was quite impressed and intrigued with some of the subnets that had ultimately gone on there. There's a lot of questions about sort of what's causing this selling pressure. So I know there is some concern amongst the group about where BitTensor is, but it doesn't mean that there's not opportunity to be had. You just got to be able to think rationally about where price may go. And I know that some people in the group have done very well in just sort of being price data driven rather than what the ecosystem is necessarily doing. And that's just a concern that I have for this. Sorry. We go on to the 4 hour. And what I would say, there is like a overall bottoming pattern that has formed down here, which we have managed to get away with. That's some nice vector candle strength there. But then we just ran out of steam at 350, really. Came back, pulled back in, retest the 50 EMA, nice. Vector candle up, and we're just sort of seeing where we are at the moment. Almost a full retrace of that vector candle from this afternoon. But we just need to stay above the 50 EMA on the 4 hour, 330. We've got to stick that. And we can stick that, we can start building. And I don't need fast moves up. In fact, they will what scare me. But just slow and steady moves back up, just helping build our position as we try and get it. We attack this 800 EMA. But I did check, sort of last 7 days and 90 days. BitTensor is in, the last 25% of the top 100 in terms of performance. So it is a lot slower than most of the other ones with where we find ourselves. Go for Ethereum next on the daily. So Ethereum definitely having a bit of a day off. But look at this size. Look at the size of these open and closed candles. Yes, we've got some large wicks, but there's definitely some sell pressure at the moment with where it is. We are still above the 50 EMA at the moment, but just look, the 10, the 20 have gone flat on each other because it's just that much there. So I think there's an explosive move waiting to happen. Whether or not it's up or down, we'll have to wait and see. I didn't bring it up, but I did notice when I was looking at them, the Ethereum ETF has had a decent amount of sales, actually profit taking, shall we call it. Back end of September, okay, we've had one black day of only 44 million. That was BlackRock, but we've had some big sell days. $500 million, almost 100 million. So there's definitely been some selling last week in Ethereum, which I think is reflected with the amount of wicks that we've kind of seen in and around there. I still stand by the retest of the 50 EMA. Remember we talked about that? It was like down like 3,400. We're now at 4,100 almost, but this is going flat. But I still think we're going to get that test there. And given how close it is to the psychological high of 4,000 and the previous tops for this cycle at just under 4,000, I think that's where we end up going before we take that move back. So I'll look at things like NEAR. They had a bit of a day yesterday. Some positive AI kind of stuff, I suppose. Saw it move up, but again, maybe a bottoming pattern, or maybe why is this so zoomed in? But there's maybe at a push you can say there's some sort of falling channel here and we get back up to this 200 EMA, maybe we break through and have that next leg moving. But yeah, I know not many of you in the group hold it. I hold a little bit left still now, still there. Links there. Ondo's had some good move. I know there were some talks about real world assets and tokenization of the stock market, etc. And it seems to have reflected quite well for Mondo. But a bit of a pullback today in terms of its price, but above the 50 EMA. So again, you know, like above the 50 EMA, Link above the 50 EMA, Near above the 50 EMA, ETH above the 50 EMA, SPX above the 50 EMA, just Tau below the 50 EMA. So of all the ones that I hold, Tau's the one that is lagging behind. Solana's looking good. So I'm liking Solana. I'm liking just its movement there. It's constant retesting that 20 EMA and the occasional retest of the 50 EMA. For me, we've not too much volume either. It's shown a good level of strength from that one. I kind of think if it pulls back, you know, talking about moving Bitcoin into Ethereum, whether or not I just lose that step and maybe go into Solana is a bit of a riskier play, but just wait for some sort of pullback to 20, maybe start phasing in and see if we can get down to those 50 EMA. But that is, for me, looking much better. And again, just continuing to build from it and showing strength each time with some tops over. Not too much sell pressure in terms of like large wicks or anything. Tron and SPX, okay, those two are there. I'm just trying to go through some of these. So that's, we can see Bitcoin dominance is sort of ranging kind of thing here. I think it is just taking a bit of a breather before probably another move. Ethereum versus BTC. Again, this has sort of come all the way up to the 800 EMA, just having a bit of a pullback at the moment, which we've taken that on board with the selling pressure for Ethereum and the fact that Ethereum's price is just sort of staying a bit static. Not surprising. We're seeing Bitcoin pull back a little bit in terms of that there. The VIX had a move up, but it's kind of corrected itself back down to the, you know, sort of the 15s levels we're at there. Dixie's kind of stationary at the moment, and we keep moving this along. That's, you know, wicked into it perfectly. So the next battleground there's, I mean, if it drops today down to 96.8, I suppose. Any of the other ones? Gold, all-time high yesterday. Silver, not an all-time high. 50 is the all-time high for silver, but it is well on its way to it. If I can find where it was, there it is. Yeah, just over 50. I wouldn't be surprised to see it get to 50 and then some selling, if I'm honest, but that's looking pretty good there. Coinbase, fine. Circle, still falling, good to see. MicroStrategy, just a second. I'll leave it with these on. It's falling into sort of a bit of a base level at the moment, so maybe we might start to see a bit of a bounce, but you know, below the 200 now. Still going down. Nvidia gapped up today. Probably going to close that gap at some stage, I imagine, but yeah, it's kind of around its all-time highs. But here it is, Oracle. This is one everyone's talking about today. Oracle made, God, what's his name? Larry, I can't think what his name is. Anyway, whoever owns Oracle, he's now the world's richest man. It's a $101 billion gain today on its price. I mean, up 36%. Look at that gap there. I'm sorry. You know, that is going to get closed. Maybe not today, maybe not tomorrow, but that thing is definitely closing. But a very strong move up from Oracle today. Palantir, again, around all-time highs. Someone asked me about Quim, whatever that is. Never really heard of it before, but yesterday it skyrocketed from $14 to $280. It was like 1,900% gain. And then today it crashed all the way back down to 80 and it's now currently at 107. No idea what it is. No idea why it moved so high, but that's where it is. TauX is there, and Tesla, yeah, sort of moving in out of that compression, and kind of a bit like Solana, it's just sort of steadily moving back up. I've not really been keeping up to date with anything from Tesla as to what may be driving that. But yeah, I think that's kind of where we are. You know, again, just to try and go back and sort of summarize, Bitcoin just needs to stick above the 50 EMA on the daily time frame. A lot of the other altcoins are doing well and are already above the 50 EMA, except for the one we're most interested in, BitTensor. But at least it is making that move up. It just needs to be that 50 EMA and build from it. And if some of the other coins are anything to go off, then maybe we might see that there. I think that's probably going to be it for me. I've been rattling on for about an hour now. again, yeah, thank you for those that did turn up to the cuddle. For those of you that haven't, I imagine the video will be out tomorrow. I just basically did it on Bitcoin retirement ready and just trying to allocate some of your long-term future investment allocations, whether that's a pension or whatever, into Bitcoin and some of the benefits that might bring. So yeah, hopefully it's worthwhile. If you've got any questions and you weren't there on the day of the cuddle, then feel free to ask them. As with all things, if you've got any other questions relating to absolutely anything, please feel free to tag me in them. I'll try and get in touch with you. I've no reason to believe that there isn't a trading pub tomorrow. So I will see you all there for that one. And yeah, enjoy the rest of your week, enjoy the rest of your evening, and I'll speak to you all soon. Cheers now.